everyone. How are you doing today? So I hope you are having a marvelous, I was going to say morning, but it's not morning. Hopefully you are having a marvelous Saturday afternoon. Hopefully you are staying warm, and all my prayers to the people in California. That's just really sad, you all. But I'm going to keep my opinions to myself. So, hello, everyone. So, welcome back to Conquering Home Buying Fears, Unlocking the Doors to Your New Home, you all. So, I know that I said that this was going to be a four-part series, but look like this is going to be a three-part series. And then as I keep practicing at it and keep going, I can really try to condense it down to two videos, to down to maybe um, one video. So today we are going to talk about home financing. So that's the sixth chapter in my book, Home Sweet New Home. And if you haven't got you a copy, go ahead and get you a copy. It is available in ebook format as well as paper back. And if you have a copy, you have a copy of it already, you can just go ahead and jump to page 49. So yeah, so we're going to talk about home financing. So that's like the biggest um, piece of home ownership. So so I'm going to talk about two loan, let's see, I don't want to call them loan products, but they are loan products. Um, Hold on, you all. I have a phone call. Hold on. And I'm going the wrong way. Woo, woo. Sorry about that. You all had to take a phone call. Sorry about that. So yes, so we are going to talk about the two main loan products. So I'm going to give you the list of all the loan products out there. So you have FHA, conventional, VA, and USDA. But the two loans that I am going to talk about is FHA. So that is the Federal Housing Administration. So FHA loans are designed to help first-time home buyers and those with credit scores below the average desirable range. These loans are backed by the Federal Housing Administration, which allows lenders to offer more favorable terms, such as lower down payments and more flexible qualifications. Okay, and then loan product two is conventional loans. Conventional loans are not insured or guaranteed by the government and typically require higher credit scores and higher down payments than FHA loans. They offer a wide range of terms and rates, making them a popular choice for borrowers with strong credit history and stable financial backgrounds. And so let me give you some of the terms. I should have did it right how it was written in the book. So go back to FHA. So you will have a mortgage insurance premium, MIP, is required for FHA loan to protect lenders if borrower defaults. So you would have an upfront MPI, a one-time payment at closing, usually 1.7% of the loan amount, annual MIP, a monthly premium added to mortgage payments based on loan amount, terms, and loan to value ratio. And so duration of the MPI. So if you put down the 3.5, the MIP will be attached to the loan for the life of the loan. But if you put down 10%, it will last only for 11 years. All right, so let's get down to conventional loans. So conventional loans also have mortgage insurance. It is called private mortgage insurance. And so PMI is required for conventional loans when the down payment is less than 20%. It protects the borrower, no, it protects the lender if the borrower defaults. So this is the purpose of the insurance. So in case you default on the loan, they have the insurance to back them up. So let's go on here. So key points, and then this is we reading from my book. So if you have a copy, I'm on page 51 now. Cost typically 0.3% to 1% of the loan. So that's the percentage of the PMI if you do not put down the 20%. Payments included in monthly mortgage payment are paid up front. Cancellation can usually be canceled when the loan to value reaches 80%. Lenders must cancel it at 78%. Benefit, it allows borrowers to buy a home with a smaller down payment but increases overall mortgage cost. So, you all, so we went over the two main loans that buyers normally use, which is the FHA and conventional. So both products do have mortgage insurance attached to them, but there is a way around it with FHA. 10% down, and then the mortgage insurance will stay on for 11 years. And the private mortgage insurance will stay on if you put down less than 20% when it comes to PMI. And let me give y'all my disclaimer. So I am a real estate agent in the great state of Texas, and this information is for the residents in the Dallas Fort Worth area. So please do check with lenders in your area. So this is just a general overall knowledge and information. And so, yeah, and no, let me also add to my disclaimer. So I am not a lender, but I have drawn on all of my resources to help you all to get information out there. Because again, it is a lot of clickbait information out there, and I just want you all to have some true answers. And so I believe that I got those answers for you. So let's go ahead and move to assistant programs, grants, plus 401k. Because I know because those numbers, they might have scared y'all last time. Because if you had been following the home buying seminar on part 2, I did the comparison of owning versus renting, and I went down the list of everything that you need for as like renting an apartment. Then I went down everything that you need for as well the cost far as a home. And so let's pick out the down payment. So this is on a house that is $381,580. Okay, so the down payment, and this is using FHA, so this is the 3.5%. So the down payment on that house will be 13,356. And I know you like, well, Lord, I don't have $13,000. Um, and then let's see, what's the potential closing cost? But this is on a new construction home, and closing costs can range about $20,000. And you're like, Lord, I don't have that much. I don't have access to that much money. Well, there are closing cost programs out there. There are down payment assistance programs out there. There are gifts that you can receive. You can also utilize your um, 401k. So, like I've been saying, don't let the numbers scare you. Those are real numbers. So, what you hear on social media, that's just social media for you. But I have real numbers down here. Down payment, roughly 13,000. Closing cost roughly 20,000. And again, these are numbers for new construction. These are not for resale. So let's go ahead. And yes, some of these programs can be used for new construction. So I've taken a class up earlier this week from Texas State Affordability Housing Corporation, also known as the T-Shack program. And so they are teaching realtors about their product. So therefore, we can educate you all on the product. So let's go over here. Let's go over here. So let's we're going to start with, let's go ahead and start with the down payment assistance since we already have that. So the Teach Check has two programs that they offer. So this is for Texas based residents. So program one is a grant, and it's for FHA, VA, USDA, and so you can get help between 2% all the way up to 5%. Now, who determines what percentage? Because it's 2, 3, 4, and 5. So, who determines the percentage? I believe that is the lender that determines what percentage you are allowed to have. And so, with this particular grant, you must stay in the home for 6 months. And if you refi, you would have to pay it back, you all. So be careful with these down payment assistance programs slash closing cost programs, because they have rules to their program. So it's just not like they're just out handing you all free money. You have to abide by their rules. And if you don't, you have to pay them back. And so they have another program that's called the 3-year deferred forgivable. So this one, it can also be used with VA, FHA, USDA, and conventional. So it's a zero interest loan. It's forgivable in 3 years. You must stay in the home for 3 years and make 3 years worth of own time payments. And if you move, you would have to pay back. So I think their rules is let's see, did I miss anything? So I think the rules the guidelines. Let me say that. I think the guidelines is pretty good. So if you know exactly what neighborhood you want to live in, I believe that these two programs will work. You can't combine them together, but I believe that these two programs would really work if you can follow the guidelines. Now you do have to qualify. Um, for these programs. So you have to have a minimum credit score of 620. And so I know that you hear a lot of people say, "Oh, you can get a house with a 500, with a credit score in the 500 credit score range." Sure, you absolutely can get a home with a 500 credit score in that 500 credit score range. You would have to first find a lender who does that, and you would have to put down a little bit more on your down payment. So I think it's just better to go ahead and get that credit fixed versus trying to get a house with that type of credit score. And so there are two more programs out there. So wait a minute, let me go back. So with the T-Shack, with their two programs, it can be used on new and existing single family homes, condos, and townhomes. So like I said, I am up here in the Dallas Fort Worth area, and they are starting to build townhomes. I think I found one, two, three, four townhome communities just in my area alone. So the T-Shack program would work for these townhomes. And let's see. So we have another program, home ready program. It is a great option for conventional loans because I was asking, I said, well, wait a minute, they seem like all of these programs seem to cater to FHA buyers, and what about the conventional buyers? So there are down payment assistance programs for um, conventional buyers. And this home ready program is designed for low to moderate income buyers and allows for flexible qualification option like using income from other household members. So that one is a good program um, for conventional buyers too. But again, be sure to read their guidelines and be sure that you are going to be able to comply with their program. So we got the SETHDPA program. And so let's see what they have around here. It says this program helps with down payment assistance and closing costs available as grants or second liens. And so this one works again with FHA, VA, USDA, and conventional loans. So it is versatile. So SAPT loan program sounds DPA programs sounds just like the T-Shack. You probably have to stay in the home for a certain amount of time, and they will be the ones that decide what percentage they are going to give you to put towards your down payment and closing costs. And so I know that you all hear zero down payment, you can move into a home. I don't know about that. I'm gonna still do my research on that because I want to get down. I want to clear away the red tape and see what this is really about, because it does sound advertising about these grants to move into certain areas. So once I get more information on those programs, I will be sure to come back and share the information with you all. So loan limits. So there are loan limits, but don't quote me on these. Again, talk with a lender. I'm just a real estate agent. So there are loan limits. So FHA loan limits are $524,224. Conventional loan limit is $806,000. So some new construction homes will fall up under the FHA construct new some new construction homes will fall up under the FHA loan limit, and some homes will not fall up under the loan limit. So again, just be careful with it. Now, this home right here that I have the example for, this one does qualify for FHA, because I really did not know that. I thought, once you go in and apply, they would tell you, whether you would whether you would qualify for FHA or would you qualify for conventional. I didn't know anything about loan limits. So again, that's why it is so important, you all, to go and talk to a realtor, so therefore they can put you in the lender's hands. So therefore you can know what it is you qualify for, because you don't want to be out here looking at a $700,000 home and the bank is only going to approve you for 450,000. And so we just not we want to move with purpose and intention. And so it's just why it's just so important to talk with them. Oh, I got ahead. I got far ahead. So again, before I know we had jumped out of down payment assistance and just different ways to help with closing, with down payment and closing costs. So let me tell you, by me being a new construction specialist, when they say that they, give you flex cash and things like that, the flex cash is to help with buying down rates, or helping with or R slash N, helping with closing costs. So that flex cash does not help towards your down payment, and it does not help with your earnest money deposit. And so here is another way that can help you with your down payment assistance and closing costs. Now, you will have to bring some money to the table. So all of that stuff you hear on social media about, oh, you don't have to bring no money to the table. You do have to bring some money to the table. How much, I don't know, but you will have to bring some money to the table. I just don't have the exact amount. So, leveraging your 401k for home ownership. Using your 401k to purchase a new construction home can be a viable option for those looking to bridge the gap in down payment or cover other upfront costs. The most common method include taking a 401k loan or making a hardship withdrawal. A 401k loan allows you to borrow against your retirement savings, typically up to 50% of the vested balance, or $50,000, whichever is less. The loan amount must be repaid with interest, usually within 5 years, to avoid penalties and taxes. On the other hand, a hardship withdrawal enables you to withdraw funds without the obligation of repayment. Still, it has significant tax implications and potential early withdrawal penalties if you're under 59 and a half. While these options can provide immediate financial relief, it's critical to consider the long term impact on your retirement savings and consult with a financial advisor to ensure this strategy aligns with your overall financial goal. So, if you have a 401k, you have two options. You can get a loan or you can do a withdrawal. So that can help with your down payment and your closing costs or any upfront fees. And so, just looking at this sheet, going through, if you're using FHA, there are upfront MIP. So that is that one-time payment upfront. And so for this $381,000 home at 1.75%, that is $6,443.92, you all. So your 401k can be some type of assistance with helping you get down payment, helping you with your down payment. So let's talk about credit score. So if you're following me along in your book, that is on page 58. So I made sure to put in here a credit graph to show you the different types of scores and where you will want to be far as credit. And let's see. So by having good credit, you will have better interest rates, and then we know not so favorable. It can be a little bit expensive. So let's go. Let's see what else. And so here's the question that I always wanted to ask you all. And so, why are conventional interest rates higher than FHA interest rate? And so the short answer to that is FHA rates are government rates and will always have what I'm getting so far ahead of myself. So FHA rates are governed by the government. So they are rates given by the government, and they will always be lower than convention. So I'm ready to buy. So what documents are needed to apply for a mortgage? So you would need 30 days worth of paycheck stubs, 60 days worth of bank statements, and two of your most recent W-2 forms, and any more financial documentation that they will need in you all. The 3%, I'm gonna say the 30%. The 3% rate is not coming back, you all. I'm just sorry to tell you that. I hate to bust your bubble. The 3% is not coming back. The rates that are out there now, let me give you the rates as of Friday. So the rates for FHA is 6.598. Conventional is 6.969. And you all, Those are the normal rates. Before the pandemic happened, these are the normal rates. When the pandemic happened, I don't know why. I really don't know why the rates dropped as low as it did, and that was a perfect time to buy. But a lot of people sat on the fence, and then you had the other set of people that just jumped on it. 3% was not a bad deal, you all. So yeah, so the 3% is not coming back. These rates that you see now are the normal rates, and if you have to compare it to apartments, or compare it to renting is 100%. So 100% versus the 6%, I think I'll take the 6%. And then there's tax benefits um, that go along with this. And so let me give you a few ways to save for a home. You all, I know y'all gonna hate me, but we're gonna have to stop eating out or either reduce how much you go through the drive through, you all. So limit your shopping sprees. You heard that I say don't stop, just limit it because I know the kids might need something, and so you have to do that. You can't say no, I'm saving for a house, but you just have to limit your shopping sprees, limit your vacations because I know people like to go to Milan 4 times a year. So instead of going 4 times a year, just go 1 time a year. Save your income tax because it's income tax season. So that's why I am doing this home buying seminar because it's income tax season. So go ahead and save those, and hopefully you have saved your Christmas bonuses or any bonuses that you get from your job. Save those, put those in a savings account and set it aside. Matter of fact, put it in a bank account at a bank across town where you know you're not going to go over there and make withdrawals, or don't even get the debit card that comes attached to it. So do not get that. Or if they automatically mail it to you, just go ahead and shred it, you all, because we're about getting a house. Remember our motto: new home, new address. Okay, and cancel any unused subscriptions and memberships. So if you know that you have not turned on Netflix, Hulu, BET Plus in probably a good 3 to 6 months, it's time to cancel that. And that not only goes for you, that goes for me too, because I have subscriptions and I'm just like, I don't even watch this on a daily basis. I watch Pluto. So why am I paying for BET Plus and I don't even turn it on unless they talk about they having a new movie on there? Because most of the stuff that's on there is already in my Sling because I have Sling, and so most of that stuff is already over there, or either it is on Pluto. And so, yes, you all. So just cancel those subscriptions and those memberships. Because new year, new address. And then I'm about to get ready to take you all on a tour. So I'm going to close this out and then I'm going to take you all. So y'all be sure to come back. So hit that subscribe button. So be sure to come back. And so let me give a huge, and I do mean a huge thank you to the following people who made this possible for me. Because if y'all have been following my Black Pen episodes, I have been doing those episodes on the rooftop of the library in another city. And the only way that I can get a room, that I can do my podcast episodes out of is by paying the yearly subscription. And I'm like, yeah, that's out of my budget right now. I need, that that money can go towards getting more books ready for the market. And and so I'm just so grateful for the opportunities to be inside, you all, and not only be inside of model homes. So therefore, when I get through with these home buying seminar parts, because it's part one, two, and three, I can take you all on a tour of a new construction home. So let me give a big thank you to the following: Susie, Sarah, Valletta, Sean, Nicole, and Georgette. So this is a combination of sales counselors and lenders. So they have provided me with the information that I need, because you all, I hear this all the time. My relative friends, they're not coming over here getting the information. So I'm making sure that I am getting the information. And that's why is in this book. I am making sure that I am attending builder classes. I'm just making sure that I just build relationships with as many builders as I can, because not all of them are equal. I have been fortunate enough to run across a lot of people to help, but it's been a lot of people that is not so helpful because they're busy looking for you to bring buyers to them. Because I get it, it's a numbers game. I get it, especially if the houses have been sitting on the market for a long time. I absolutely get it. But, you also got to explain to me the ins and outs of new construction. So I have been studying new construction. Next month I'll make 5 years. So in February I'll make 5 years that I have been studying new construction, you all. So feel free to ask me any questions, put them below this video. And if you are ready to make that move, my contact information is below this video. And I cannot wait to see you in the home tour um, video. So, all right, you all, and go ahead and stay safe and warm, because the temperatures are supposed to drop over the next 2 days. So if you're in the Dallas Fort Worth area, uh, be sure to take precautions and everything. So let me see if anybody have any questions. I am just so grateful, you all. Let's see. Okay, that did not work. Okay, so that works. All right, so let's see. So we have, let me see. All right, so we do not have any questions, you all. So, all right, so I will see you in a quick second. We are going to tour a new construction home, and I will see you soon.